Welcome back to Stock Talk with Eric Anthony. Hope your guys' day is going well. As most of you know, if you guys are following the market, today has been actually quite exceptionally green day. And you guys out there, when you guys see green, kind of get fearful that it could all just go down even that much more later on. I know I do for sure. Like before, I used to see green and be like, oh man, that's what's up. Then the following day, as of recently, every time we have a big green day, it almost seems like the saying is, the market giveth and the market taketh, right? So just be a little, cautious with the green today. We do have the Fed speaking this week. I don't know. You think we're going to get 8 rate hikes? Well, it's something to think about, right? But anyway, just always be prepared, not surprised. Let me know in the comments below exactly why you guys think today was so green. Personally, and I hope that most people who come to this channel as long-term investors shouldn't really care about whether the day is green or whether the day is red on a day-to-day. The reason why I like to look at the markets is not so much to see if I'm rich that day or if I'm poor that day, but it's more to figure out how I might set up some new plays in the future regarding some existing positions, or if I want to maybe start nibbling in some plays that I felt were a little overpriced maybe a year or two ago, and maybe now that just seems a little bit more attractive. So again, that's why sometimes when you come here, I'll probably go over different sectors and I'll review how each of them went on the day-to-day. And then there'll be some days that we'll probably just focus more on the business, because remember, at the end of the day, the stock is not the business. But piggybacking off of that, it was a green day, so let's just kind of jump into some of our favorite sectors that we're following and see how they did. Okay, starting with our big retail. Ulta is up just under 4%, Target about 3%, Walmart around 1%, and Costco around 3%. And Dollar Tree really didn't do that much today. Our semiconductors, we have Qualcomm at about 2%, AMD just under 7%, and Nvidia just under 8%. So it was a pretty big jump for them. And even in the after hours, they're actually up too. Getting into our fintech space, I can't even believe I'm saying this, but Affirm is actually up today. So I don't know. Have any of you guys been taking advantage of these dips? I wouldn't be surprised if there are a few more dips coming along the way, but I just want to know. Let me know in the comments. Getting back to the chart, Affirm was up 8.05%, SoFi was up 3.4%, and PayPal was up 3.7%. Getting into some of our favorite long-term holds, Chipotle up 1%, Dutch Bros up 2.3%, and Palantir up 2.5%. Have any of you guys noticed that Palantir has actually been doing pretty well over the past couple weeks, ever since the big sell-off from Auntie Kathy? Still haven't met my goal with how many shares I want, so I wouldn't mind if it kind of stays in the 10s. But at the end of the day, if it keeps going up, who am I to stop it? Getting into our genomic space, everything was pretty much green. The biggest one here today was probably PacBio, about just under 9%. And following that, Editas around 6%, and Bingo was up about 5.4%. Mount Fang was all up as well, all hovering around the 3 to 4%. Tesla seemed to be the winner today in that space. And NDM actually had a nice little run today. It was just about 6%. During the middle of the day, it was a little bit higher than that. Desktop Metal was up just under 7%, which is always very exciting to see. With today, I wanted to just review with you guys price action that I saw today, have some news for you regarding Desktop Metals, and I have some news on Alpp on what we should expect for tomorrow. And I wanted to review with you this article that caught my attention from Forbes for drones. It was actually in regard to a report that came out for the Aviation Rulemaking Committee. A report issued last week takes aim at rules that have been holding back the burgeoning of $58.4 billion commercial drone market. The much anticipated unmanned aircraft systems, also known as UAS, and the Beyond Visual Line of Sight BVLOS Aviation Rulemaking Committee final report has recommended an overhaul of existing regulations and the creation of new ones to enable industry scalability. Industry scalability, commercial, right? So with this article, it was actually quite long. In the link below, like always, I will put the link to the article so you guys can read the whole deal. For now, I just want to read you some highlights, something to keep in mind, and something that we can maybe look forward to as an Alpp investor into the future. Okay, piggybacking off of what I said about ARK. John Damish, ARK member and CEO of Iris Automation, creators of Cassia 360, the leading detect and avoid system for safe beyond visual line of sight flight operations, explained that the BVLOS ARC was an amazing compilation of the industry leaders from all corners of aviation, from new entrants to our industry to legacy household names to community advocacy groups and labor unions. The ARC ARC was divided into several working groups. These groups were dynamic and active. A great deal of time and effort were put in by everyone involved. That effort involved 9 months of effort, 3 more than they expected. It culminated in the publication of a 400+ page report containing 70 recommendations, and these topics range from flight rules, remote pilot qualifications, aircraft qualifications, to remote air carrier and remote commercial operator requirements. And if you want more detail on this coverage, you can also look at the link below. Key recommendations included to use a flexible risk-based approach to BVLOS operations that takes into account air and ground risks and levels of automation. This starkly contrasts with the traditionally rigid one-size-fits-all approach to regulations. Modify the right-of-way rules to give UAS priority over crewed aircraft in certain low-level altitudes and locations, for example, near critical infrastructure, and acknowledge unique UAS attributes, including autonomous tech, for example, detect instead of see and avoid, and these constitute significant changes to the status quo. Today, UA must always yield the right of way to crewed aircraft. They would like to update operator licenses to include some of these BVLOS operations as part of the current remote pilot license, and to create 2 new ratings, remote air carrier and remote operating certificates. The latter would enable commercial one-to-many operations. All of this would alleviate the need for one-off waivers and routinize the BVLOS flights. They would like to create a new BVLOS rule for UA aircraft and associated equipment certification of vehicles up to 800,000 feet to pounds of kinetic energy. Currently, the FAA has not issued an airworthiness certificate to any UA manufacturer. The FAA does this by exception to various rules written for general aviation. They would like to adopt a non-mandatory regulatory scheme for third-party service providers, also known as 3PSP, that would support UAS BVLOS operations. ATC will not be involved in managing low-altitude air operations. This opens up potentially lucrative opportunities for private companies, such as T-Mobile and Verizon Skyward, to play a key role in facilitating drone flights. If you guys want me to do a deeper dive on what Verizon and T-Mobile have been doing to try to build this infrastructure to help facilitate drones in a more commercialized space, let me know in the comments below. Getting back to these recommendations were not unanimous. There are areas of disagreement, as you might expect for such a wide and reaching and complex task. IRIS does not agree with all of the recommendations, but does agree that all involved share a common goal of integrating uncrewed aircraft into the national airspace safely and efficiently. We all recognize the benefits of uncrewed aircraft to our country and its citizens. There is much work to be done, but the commitment by the industry and the FAA to the BVLOS ARC is a good sign and a welcome step forward. The ARC report is a critical first step to maintaining U.S. global leadership in aviation. The Commercial Drone Alliance looks forward to collaborating with the stakeholders as the FAA works to implement the recommendations in a timely way. Commercial drone operations provide essential services to the American public, including delivering life-saving medicines and conducting critical infrastructure inspection. And what company do we know that can help do that? I'll let you guess. To fully realize these benefits, the FAA must continue the momentum of the BVLOS ARC report by advancing a rulemaking process and updating the regulatory framework to provide a pathway for these operations and the economic, societal, workforce, and environmental benefits that will follow. And even so, the process to create a new regulation on average takes about 2 years. One of the FAA's recent forays into rulemaking involved a rule on the remote identification of drones. The rule requires all drones over just about half a pound registered with the FAA to have an electronic license plate to broadcast message elements such as the drone and operator location to both the public and law enforcement. The RID rule process kicked off in December of 2019, and they received over 53,000 comments. The FAA published the final rule in January 2021. So it's almost about a year and a half to figure that out. Implementation starts this year, when drone manufacturers have to include the RID capabilities in production by September. Drone operators will have to fly RID compliant drones in September of next year. So I don't know if any of you guys are that knowledgeable regarding the RID process and the rule process, but like I just said, for something to take about 2 years just to get things moving, in today's world, that is way too long. So fingers crossed that as time goes on, these rules start becoming implemented and we start to really open the door to just under $60 billion industry. Let's just hope that the FAA does what it needs to do and we get this thing popping. Piggybacking off of Alpp, let me show you what you can expect for tomorrow. Alpp had posted, "We are proud to be attending AGP's Battery Metals Revolution Day tomorrow and to be presenting our graphene lithium battery cells in addition to our AX class of solid state batteries." And if any of you guys want to see a little more information on what Alpp has in works with ElecJet and their batteries, go to my page and just type in Alpp, and I got some videos on ElecJet and the bulletproof test. So I think it's pretty cool. I don't know if any of you guys think it's cool, but I'm a nerd like that, so I think it's pretty cool. And on another note, I've actually emailed AGP. I'm hoping to get in, and if I can get the link, I registered, but I can't find the link. So once I'm in, I will watch the presentation and then expect a video on those results within the next couple of days, all right? So just look out for that. I don't know if you guys know, but on March 22nd, there will be a webinar for Desktop Metals. We are about 1 week away from our Production Systems P-50 webinar. It'll take place on 3/22 at 1 p.m. Eastern, and they will be showing us how the P-50 is paving the way for mass production of metal end use parts with breakthrough AM technology that delivers new value for manufacturers. In case if any of you guys are wondering what the P-50 is, it is this. The P-50 is a revolutionary machine that Desktop Metals has been working on for quite some time, and it's finally just been released just a few weeks ago. And we already know who their flagship customer was, and that was Black & Decker. All right, so what makes it cool for about the P-50 is that it could actually print out almost any metal, alloy, or even wood. Shout out to my boy Sergi for giving me some tips on the P-50. It's about 2.2 million per machine. So considering that Desktop Metals made 112 million last year, that's a big deal. That's 185 million from just those pre-orders and not even considered as part of the 2022 guidance. Look at the Production System P-50 over a 10-year lifetime value. 2.2 million upfront system revenue. 4.3 million for a 10-year binder consumables and extended warranty revenue. 6.5 million for 10-year lifetime total revenue with 3 times upfront revenue, 3.8 million for 10-year lifetime total gross profit, which is about just greater than 55% of a 10-year cumulative gross margin. The Extreme 8K illustrative 7-year lifetime value will be about 112,000 upfront printer revenue, 1.5 million for 7-year resin consumables and extended warranty revenue, 1.6 million for the 7-year lifetime total revenue, which will be 14 times upfront revenue, 0.8 million of a 7-year lifetime total gross profit compared to just greater than 50%. On 3/22, I'll definitely be checking out that webinar, and just like I'll be doing with the Alpp thing, after I watch it, expect a video and let's see exactly what they say. Hopefully we hear about some new customers that are in the pipeline, but if not, I'm very eager to see what Desktop Metal has in store and what we can learn from that webinar. Well, again, hopefully you guys were able to get just an idea on how the market did today. Don't be surprised if some price action doesn't go our way after the Fed talks. So just kind of keep that on your radar. Hopefully you guys learned a little bit regarding just some of the regulatory obstacles that we need to get over in the commercial drone space, and wanted to bring to your attention something to look forward to with regard to Desktop Metal and their new flagship production system, the P-50. All right, well, like always, thank you so much for checking in with Stock Talk with Erik Anthony, and I'll see you mañana.